Welcome to the Amberdata podcast. I'm your host today, Chris Martin, analytics engineer at Amberdata. Today, I'm joined with Jamie Holmes, the content manager of Perpetual Protocol. We have a lot of interesting stuff to talk about today, including an overview of Perpetual Protocol, how it works, and what's the future. We're going to talk a bit about DeFi DEXs and lending. And most importantly, we're going to have a really cool conversation about different metrics and data that Jamie's using to make investment decisions and analyze trends going on in the market. Jamie, welcome to the podcast. Really excited for this conversation, but let's start with an intro. You've got a really long background in crypto. You've been working in the space for a number of years now, doing quite a bit of content. I'm curious, how did you first hear about crypto and how did you get started in the space?
Hey Chris, great to be here. Yeah, so I first heard about crypto quite a long time ago, while I was studying at university from Max Kaiser's Kaiser Report. But at that time, I was deep down in my studies. I was a bit of a gold bug at the time, and I thought it was really interesting. But yeah, I didn't really look into it further at that time. It wasn't until several years later, like around late 2014, early 2015, started to experiment a bit with crypto. So at that time I was a university student, so yeah, I was like pretty much broke. But yeah, I've become serious about like developing a new skill as well, like trading, and just through that pursuit of like knowledge and in terms of trading, I got into crypto. And then later I set my sights on entering the crypto space as a writer, since writing was a skill I already had and honed throughout my life. And then by around late 2016, I managed to land a gig with a crypto media outlet named Crypto News. So I was working as a writer there, and then I became editor for a while. And then from there, I'd say that's where my crypto journey started. I've become more immersed in the space, starting to meet other people, attending conferences and events like DevCon and Hackers Congress. Of course, learning a lot from like trading mistakes, and then just going into different aspects of crypto because I studied economics, so that side of it made a lot of sense to me. But then what really pulled me in further was like, the whole history around like the cypherpunks, and then the kind of activist and philosophical side of it.
Yeah, definitely. Especially coming in from the early days, I'm sure there was a lot of philosophy and a lot of political movements back then, right? I've been reading a lot of your content since we met up a few weeks ago, and you have a lot of really cool, great content, very insightful stuff to talk about. So appreciate the work you're doing now. Tell us about your time at Perpetual Protocol. What sort of things have you been working on there?
Sure. So yeah, I've been working with Perpetual Protocol since January of last year, and yeah, I'm one of three of the marketing team. So my role is as a content writer, and so basically my responsibilities are like managing the blog, like doing research for articles, that kind of thing, and also managing like the YouTube channel as well. So yeah, as part of my job as well, I also help out with like the marketing and social media stuff. And yeah, occasionally like to do talks or hosting events or joining podcasts such as your one as well. And yeah, so what I've been working on mainly, like my main focus is really like on education. I think that's like a really important thing. Yeah, like
Definitely.
just introducing people to the space, helping to provide, helping people to find like alpha as well. And as well, of course, like promoting Perpetual Protocol.
Yeah, definitely. I think education is the most critical part right now where we're at. We're sort of on a cusp of adoption, and I think education is the only step forward to increase that speed. So yeah, totally aligned. Let's talk about Perpetual Protocol itself. So it's a perpetual futures DEX. You have over 340,000 users, 10 million transactions. You have your own token with the PERC token and your own developer ecosystem. What's the history behind the protocol?
Yeah, sure. So Perpetual Protocol is founded by two Taiwanese entrepreneurs. So the names are Yen Wenfeng and Xiao Kang Li. So they've had a lot of experience in the world of business. They've managed several successful startups, and then they turned their hands to crypto, and they really inspired what was happening in the early days of decentralized finance, or DeFi, and especially the projects Uniswap and Synthetics. So the initial idea for Perpetual Protocol was like a trustless protocol that uses smart contracts to make trading financial instruments like more accessible to all. And originally it was actually called Strike Protocol, and they initially focused on options, but at that time it was like around 3 or almost 4 years ago now. So it was a lot harder back then to do something like that. So they later shifted to perpetual futures because that is the most traded type of instrument in crypto. And yeah, building that on chain was like more feasible than building options on chain. So yeah, and since then we're one of like the main innovators in the perpetual DEX space, and we're actually the leading perpetual DEX on Optimism. I think we're accounting for like 10% of like the total transactions on Optimism, just from one of our smart contracts, the clearinghouse smart contract. And we've facilitated almost $18 billion in trading volume since launch. So yeah.
Wow, that's massive. What sort of countries do you see the most activity from?
Most of the activity comes from Asia and Europe. So the biggest countries in terms of like trading volume and number of traders are like places like Japan, Australia, New Zealand, China, and Korea in Asia. And then in Europe, most of the volume is coming from Western Europe. So, and also I'd like to add that Canada is also another place where we see a lot of traders coming from as well.
Wow, that's really interesting. You mentioned earlier that the DApp is exclusively on Optimism.
Yep.
Have there been conversations about launching on other chains?
Yeah, we're committed to Optimism. We really believe in their vision. They've been executing really well so far. And, with the upcoming Bedrock upgrade and possibilities with like the OP stack, we think this layer 2 is probably best positioned for long-term success. Although we do monitor other like chains, but, we're kind of committed to Optimism at the moment. They have a really strong ethos around open source software, which, we really identify with. And yeah, they've been executing really well so far. So we're really happy with what they're doing and with their vision as well.
Yeah, that makes a lot of sense. So the protocol itself, there's a connection between Perpetual Protocol and Uniswap v3. How does Protocol leverage Uniswap v3 liquidity pools and its architecture?
Right. So basically, Perp is built on top of Uniswap permissionlessly. So when you're trading or market making on Perp, you're actually using a Uniswap pool underneath the hood. So these pools are kind of exclusive to Perp. So the tokens in those pools, you can't take them anywhere else. You can only use them through Perpetual Protocol. And these tokens are known as virtual tokens. So for our ETH market, for example, that is a Uniswap pool made up of virtual ETH and virtual USD tokens. So basically, the point of that is the virtual tokens enable us to represent perpetual futures positions. So our highest volume pool is Ethereum. So what happens is basically the main smart contract of the protocol, the clearinghouse, takes some collateral from a trader, and then they can mint up to 10x the amount of virtual tokens, since the maximum leverage is 10x. So yeah, let's say if you deposit $1,000, you could mint up to $10,000 worth of virtual ETH to go long on ETH, and then you'd have 10K dollars worth of exposure. And then what happens basically is that the trader is removing virtual ETH from that Uniswap pool, and then they're adding virtual USD to the pool. So the virtual ETH that they hold basically represents their position. And then yeah, these pools are only accessible through the protocol, but we're basically using Uniswap's architecture as a trading engine. So these virtual tokens are only for opening and closing positions and accounting for trader profit and losses. And these tokens do not like have any value outside of the protocol, as is the case with derivatives in general, that people may be more familiar with.
Mm-hmm. Yeah, it makes sense. And how does the perp token play a role in this?
So the vision for the perp token was always to allow people to stake it and then earn a share of the protocol's revenue. So this has been recently realized in December of last year. So we introduced a program called Lazy River. So basically, it's just a way for people to easily earn a stream of passive income. So all they have to do is lock up some perp, and they can earn a share of the trading fees generated by the platform. So the real advantage of that is that any holder of the token can share in the protocol's success, right? Because any holder can earn a share of the trading fees, and basically the amount that they can earn depends on how many tokens they lock and how long they lock for as well. So we adopted a vote escrowed token model. So we basically forked Curve's contract, Curve Finance, And then if you're familiar with curve finance and VECRV and how that works, it works in a similar way for perp, but with a few slight differences. So one difference is that the maximum lock-in time for the curve token is actually 4 years, but the maximum lock-in time for perp is 1 year, 52 weeks. And then what do token holders stand to earn? So in aggregate, they earn 15% of the trading fees every week. So these are distributed to the VE perp token holders. So you can get VE perp if you lock perp for a certain amount of time. And then the token is also central to our referral program at the moment. So our referral program works a bit differently to like most exchanges. So what happens is the total referred volume, 20% of that is then given as rebates to our referral partners. But then your share of the your balance of VE perp and your share of the VE perp supply basically determines how much of that referred the rebates that you earn basically. And then one final thing about the token as well is probably true for like all tokens in DeFi, but yeah, it's also like a governance token as well. So as I mentioned, the voter crowd model earlier, if you lock for like the maximum time, you can get up to a 4x boost on your voting power. So not only are you earning more fees from the platform when you lock up perp, but you can also like amplify your voice and have a greater say in how in the future direction of the protocol.
Actually, so it's also a governance token on top of passive yield.
Yeah.
Awesome. And you mentioned Lazy River, talking about really cool names for these different dimensions. There's also Hot Tub. I love the name Hot Tub. It's fantastic. The Hot Tub vaults, as I understand it, are it's a new product where users can earn passive yield by an automated vault strategy. So essentially, you lock up tokens into the vault, and that vault then controls and earns you passive yield. Is it appropriate to compare them to a DEX pool or perhaps a DeFi lending pool?
I'd say there's two comparisons I'd make. So one is like, the concepts of vaults was made popular by like Yearn Finance and yield aggregators. So it's kind of similar to that, but the strategy is different. So the strategy is using like arbitrage, which is like a low risk trading strategy, buying low, selling high instantaneously. Another comparison you can make is like to MEV bots. So MEV bots on Ethereum mainnet, there's like negative and positive MEV, right? So the negative MEV is things like sandwich attacks, front running, back running. Basically, they're extracting value from users. But actually, some of the MEV that happens is actually considered like positive MEV, and that form of MEV is arbitrage, because that helps to make markets more efficient, gives fairer prices to traders as well. So what the hot tub does basically is what MEV bots do in terms of positive MEV. So it's basically just arbitraging. But the difference is that on Optimism, there's no public mempool. So there's actually like no MEV at all. So yeah, it's kind of similar to what MEV bots are doing when they do arbitrage. Yeah, so it's all like automated for a smart contract, and yeah, it's just basically taking advantage of price differences in the Ethereum market on Optimism across perpetual futures and spot markets.
I see. Are these strategies managed, or is it an automated vault?
Yeah, it's all automated. Our contracts can be found on like Etherscan, and you can follow the trail yourself. So basically, yeah, it's just like an automated arbitrage strategy. You're buying ETH at a lower price and then selling in one place, and then selling at a higher price in another place instantaneously. And the arbitrage is done across spot dexes on Optimism, so like Uniswap, and then perpetual futures as well on Perpetual Protocol. So these smart contracts basically interact with our protocol, and then they also interact with an arbitrage bot that detects opportunities. And then whenever there's a price discrepancy, the vault opens a position on perp, and then it either buys or sells ETH in the spot market. So it always remains like delta neutral, and there's no price exposure. And then basically it just pockets the differences in prices, and then delivering like a low risk, steady and sustainable yield.
Awesome. Yeah, that makes sense. That's really cool. So changing gears a bit, I'm curious about your take on the current market right now. What sort of trends are you seeing generally? And as a follow-up, I'm just making an assumption here, but I feel like there is a lot of users holding long positions in like let's say Bitcoin, for example, more long positions than short positions, which is pretty clear if you look at the futures markets with like long short ratios. It's generally in the positive. Do you think this is the case right now in our environment? Everyone is long versus short, or do you think we're facing maybe a bit of an echo chamber where volumes are fairly low and everyone's just preaching crypto, 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 but we're all stuck in this industry?
Yeah, so I'll just speak to the trends first. So yeah, I think like we outlined this in a blog post, one of our blog posts, that the main kind of themes for this year, and in the article we included perpetual dexes. We think that's going to be like a big theme this year, following the collapse of like FTX, and there's an erosion of trust in like centralized platforms. And then like another key trend is like the real yield trend. So a lot of projects are turning to like vote escrow tokenomics, or different forms of tokenomics to provide like more value for their token holders. I think we're kind of moving past that phase where when DeFi first started, we just had a bunch of like governance tokens, didn't really do much, didn't really provide much value. It's just like a way for people to like vote and stuff, and it's becoming much more than that now in DeFi. And then two other trends that I think are really really gaining momentum are the liquid staking derivatives. With the upcoming Chappella upgrade, I think there's going to be a lot of like hype and a lot more adoption of liquid staking derivatives, especially further along the year as more confidence builds, as these are risks around staking in Ethereum are removed. And then of course layer twos as well. We've seen Optimism's airdrop. They've got the Bedrock upgrade coming. Arbitrum recently done their airdrop, and they've got a lot of like activity on their L2. And then you've got so many zero knowledge proof focused kind of layer twos, Starknet, Scroll, Polygon, just to name a few. So yeah, it's like a real blossoming of L2s happening, and I think it kind of started last year, but I think it's going to continue this year as well. And then as for whether more users are long or short, I haven't really looked into that, so I'm not really sure overall or in aggregate, but I would imagine that more people are long rather than short, just based on the general trend of crypto. And I think in terms of like an echo chamber, I think there's an echo chamber in terms of like tribalism around different projects, like this chain is better or this L2 is better than this. But I think when it comes to like trading and views on the market, I see such a variety of opinions. And it's quite healthy actually, because then it makes you question your own kind of perspective as well. And what happens next to crypto in terms of like price, yeah, it can really polarize trading communities. And you have perma bears, you have perma bulls, and then you have people that go with the flow, then you have like people who are trading long term versus short term. So yeah, like I think there is a bit of an echo chamber, but I think in terms of like if you're really like trading focused, then I think you just have to like, and then it's not really a problem.
Yeah, that makes a lot of sense. I think you mentioned a lot of really cool things like L2s. I'm really excited to see a lot more L2s, even L3s come into play.
Right.
I think these are going to be huge for adoption, especially if you're paying outrageous fees on Ethereum for gas. Switch over to like Optimism, which has pennies to the dollar on a transaction fee. So these L2s I think are beneficial, but you also have so many new cool technologies with privacy chains, ZK. It's very exciting. When it comes to like metrics and data sets, what sort of data sets are you looking at? What sort of metrics are you looking at?
Yeah, so I like to focus on fundamentals mainly, but yeah, I'm kind of like a fundamentals technicals guy. Sometimes I look at like sentiment data as well, but I really focus mainly on fundamentals. So I think that just comes from my background, my educational background. So, if you think about like fiat currencies like the dollar or pound sterling, if you want to arrive at a certain value for these currencies, then you have to look at the fundamentals of the economy. Like how's the export sector doing? What's growth and inflation like? Are people on average, are they saving or borrowing? And then you can kind of take the same approach with cryptocurrencies as well. So if you look at Ethereum, you can look at things like the number and actually the growth in active addresses, the number and growth in transactions, the value transferred, and so on. So you can gauge the health of this crypto economy. So that sort of on-chain data is like a starting point for me. Sometimes there's like additional context you have to uncover. Like sometimes there's a sudden jump in active addresses, and sometimes it's meaningful, sometimes it's not. So a lot of the time you have to ask yourself, whether is it genuine users or is there something else going on, like a dust-in attack, for example. And then I also like looking at the indicators inspired by traditional finance. So, in traditional finance, there's the price equity ratio, and then the crypto equivalent of that is the network value to transactions ratio, or NVT ratio. So it's basically comparing a token's market cap with the transaction volume. So you're looking at the value of that blockchain network in terms of the transaction volume it facilitates and seeing whether it's under or overvalued. So if that ratio is really low, then it suggests the token's undervalued, at least based on transaction volume. And yeah, it might be worth buying for the long term. But then if there's a really high ratio historically, then it could indicate, the token is overvalued. And then
that's a great metric. Yeah.
I think another one as well is like, it's particular to Bitcoin, but like the Mayer multiple. So it's made famous by some guy called Trace Mayer. He's like an old school Bitcoiner. So you just divide the Bitcoin price by the 200-day moving average, and just that model basically says to accumulate Bitcoin whenever that value is below 2.4. I think it's quite an interesting and pretty simple technique, and it's worked pretty well over the years. And then also as well, I find really interesting with the work that people at Coinmetrics have done. So I think they introduced the concept of realized capitalization. So it's an alternative to market cap. So I think most people should be aware, like market cap is like a really kind of, it's just like an arbitrary kind of metric, right? Because you could create 10 trillion tokens and, sell it for like $1, and then your market cap's like $10 trillion, right? But then with realized cap, basically you're accounting for like the cost basis of every holder. So it takes the price at the time the UTXOs were last moved. So kind of gives you more of an indication of like who's holding or who's speculating. And then from realized cap as well, you can create the market value to realized value. So it's just a ratio between the market cap and the realized cap. And it's basically like an oscillator. So like with the NVT ratio, it can help to identify when an asset is undervalued or overvalued. But I think one drawback of these indicators is that they don't really work well on lower timeframes. So as far as I'm aware, I haven't really tested them, but they do work pretty well on like longer timeframes. So unless you're, if you're a long-term kind of trader or you're accumulating more spot, then, these metrics work really well. But, if you're day trading or scalping, then yeah, you probably need to look more into like technicals and sentiment. Another thing I really like to look at as well is like simple like the address distribution. So how many addresses are holding 1, 10, 100, 1,000 ETH or Bitcoin? So this kind of related to the concept of hold waves, and this was introduced by Unchained Capital. And yeah, they're just looking at like the age distribution of coins and how long they're held until and how long until they're sold. And I think that was one of the key fundamentals driving Bitcoin's rise from like 15K in November. So if you look at the data, you'll notice there's like a really sharp increase in the number of addresses holding at least one Bitcoin. And now I think it's like near 1 million or over 1 million now. So there's like 1 million addresses with more than one Bitcoin. And, that growth is just going to keep continuing and higher. And if it keeps going, that's like really positive for the ecosystem.
Yeah.
So, I noticed that in like mid-January, and that kind of painted a picture to me, like Bitcoin was considered cheap because more addresses are acquiring one Bitcoin and everyone's getting, staking their claim to like one Bitcoin. So, so people were like scooping up coins at that time, and it acted like a confirmation signal that further gains were ahead. So yeah, I outlined this on my Medium, my personal Medium account, and I put forward a bullish case for Bitcoin at that point based on some fundamentals, including the number of addresses holding one Bitcoin. And I think around that time it was like 20 to 21K, and now we're sitting at like 30K. So I'm not really surprised by the upward move. Like the fundamentals showed like a real improvement.
Yeah, I'll link that article in the YouTube link. That's great.
Oh, nice. Yeah. The title of it, I tried to come up with a funny title. It's called Bitcoin Fundamentals Suggest This Bear Hunting Season, and then there's like a picture of a bear. You can see it now. And finally, I also like to look at like time series data and statistics. So I did a lot of statistics in university, so I'm really interested in like time series analysis. And yeah, in fact, if you search Bitcoin seasonality in Google, the first search result that comes up, like I actually wrote the article, and it's basically looking at seasonality in Bitcoin. So it's like looking at the monthly trends, like when does Bitcoin perform better on average, and also things like calendar effects, day of the week effects, which day tends to be better or more volatile, and then also like time of day effects. So, looking at when does Bitcoin tend to move more? Is it during the Asian, European, or American sessions? So that sort of analysis and data really interests me as well.
Yeah, wow, there's a lot of alpha here. This is amazing. I'm taking notes and adjusting my trading strategies right now. When it comes to like large cap tokens like Bitcoin and Ethereum, do you use these metrics to differentiate between long tail assets, or are you also looking at long tail assets in a different way? Or like you mentioned, using sentiment analysis to
Yeah,
look at these? Mhm.
yeah. I think the fundamental metrics that I mentioned, they really only apply to like the large caps. I think because you've got that historical data to look at, whereas a lot of the long tail assets they haven't been around that long. And then they've also got different use cases as well. So Bitcoin and Ethereum, they're more like money or a store of value, whereas other tokens might be aiming to do something else. So to me, large caps are just the ones with like the most liquidity and the largest market capitalization. It's not a perfect way to look at it, but I just prefer to like mainly trade those assets because they're more liquid. Long tail assets, I think the on-chain data is slightly different. Like, with platforms like June Analytics and others, you can really look at like you can do like whale watching and that sort of thing, like see who's accumulating them and spot projects early. So that's one way I kind of differentiate. And then like sentiment as well, and technicals kind of come more into play for me anyway when it comes to long tail assets.
Yeah, definitely. And I think you have a good point that you mentioned earlier, which was on sentiment in terms of community. Communities tend to really fall into this, I don't want to say cult-like, but very much into their, pro whatever community they're in, anti every other community that they're not in. So you probably see a lot of bias when it comes to sentiment on some of these like side chains or some of these smaller tokens.
Yeah, for sure.
When it comes to trading, do you use any L2 or side chains, or are you mainly trading on like Ethereum?
Yeah, I've experimented with trading on other networks like Solana, Polygon, Phantom, Arbitrum, ZK Sync. But for on-chain trading, I prefer mainnet Ethereum or Optimism. So the main appeal of Optimism is like exactly like Ethereum, but just the gas fees are a lot cheaper, and then the ecosystem is really good as well. So you have like a lot of great protocols, and then Optimism's like really committed to like open source ethos. So that's something that really interests me, engages me as well. And their vision for public goods funding is something I find really interesting. And then with like the OP stack as well, there's going to be like some really amazing applications. Like I think it was like a few days ago, an options protocol launched on their own like kind of customized OP rollup, Ava. So there's a lot of interesting things being built, and I think even like late last year there was like a Game Boy chain, and they were building like a chain for gaming using Optimism, and that's just like really mind blowing. I also think what Phantom is doing is quite interesting. So I want to dive back into that ecosystem. I was playing around in that ecosystem. I think it was like early 2021. Yeah, I want to check out more protocols there to see what they're doing and kind of catch up with that ecosystem. I think like funding apps through the gas fees that they generate is like a really great idea. I think that's like a recent update from their ecosystem that is quite exciting, I think.
Yeah, I think that's a whole lot of fun exploring these new chains before they're major. There's so much interesting stuff going on. One of the big concerns that I think larger traders would need to worry about is like liquidity on these side chains or on these L2s. Do you ever find that that's a potential problem? What would you suggest there for larger traders?
Yeah, I think that's something that's gonna get better with time. From what I can tell, I'm not like a big whale myself, but a lot of whales prefer to stay on mainnet because that's where most of the liquidity is. But I think as the roll-ups become more mature, and as Vitalik Buterin says, taking the training wheels off, and as they actually become as they inherit Ethereum security and become more decentralized, then I think we'll see more of that liquidity move over, simply because it's a lot cheaper and a lot more efficient and a lot faster.
Yeah, that makes sense. So going back to Perpetual Protocol, what sort of data does the protocol collect, and what kind of success metrics do you guys look at, especially when it comes to adoption, liquidity, trading, what have you?
Yeah, so the main data we look at is actually on chain. So it's actually from a public June dashboard. So anyone else can look at this data as well, and it tracks all of the important health metrics of the protocol. So these are things like total value locked. So this is basically the balance of the clearinghouse smart contract. And then we also pay close attention to the daily trading fees and volume. So we use a monthly average for the medium term trends to evaluate success in that area. And then we also look at volume and fees per market. So this kind of indicates what people want to trade or what people are interested in trading. And then, yeah, we also look at, a lot of generic things as well, like weekly active traders, the insurance fund balance, making sure it's rising and, the protocol's healthy. And then also the tokenomic side of things as well. So the number of token holders, distribution, and then the amount of trading fees and the yield that they're generating as well. So we kind of want to see more token holders, wider distribution, and more fees going to them. And in terms of data collection, so we actually have a dedicated data team, and they collect data of that both on chain and off chain of the protocol itself and of the entire ecosystem. So that helps us really formulate our strategy and help us to deliver new product or improve existing products. So off-chain data, we look at things like centralized exchange data, UI events, that sort of thing. And then success to us is as well as improving the general, health of the protocol and, up only for total value locked and volume and so on. We like to measure the impact of everything that we build. So any new feature, we look at the data and we see how successful it's been. So it could be a new market or it could be a new feature, limit orders we introduced a while back. And then, yeah, so we also look at the impact on certain cohorts or segments of users. So retail versus institutional, for example, or, small, bigger players like whales, and see what they're doing. And then, yeah, because certain cohorts might move things, move metrics in the right direction and have a large impact on those groups. And yeah, we just use that data to kind of prove the feature we built had the desired impact. And then we kind of take an experimental approach. So we're always testing out, introducing new things, and then collecting data, measuring the success of these new features, and iterating constantly.
Yeah, that makes sense. And personally, I'm really curious if you guys do any competitive analytics. So coming from a centralized exchange or SEX, myself, we do look at competitors, and it's very easy to do a one-to-one comparison. How does competitive analysis look like for non-chain protocol?
Yeah, so we see our competitors as centralized exchanges, because that's the goal. That's their main end goal, right? Is to match their features or exceed them, or do better than them. So we want to bring people away from centralized platforms onto on-chain derivatives. So one of the things that we do, we actually compare the performance between Perpetual Protocol and centralized exchanges, price impact of certain pairs, because that's the standard we're setting for ourselves. We want to be as good or better than a centralized exchange. And if traders come to our DEX and the price impact is way too high, then they haven't really got much of a reason to use a DEX, right? Because they can get better liquidity on a centralized exchange. So yeah, we really have to match that experience, and I think it's going to happen, but it's going to take a little bit longer, because things that are built on chain is just a bit harder than doing it in kind of a black box kind of centralized way.
Yeah, absolutely. What's the future look like for Perpetual Protocol?
So the vision for Perpetual Protocol is to be a trustless crypto trading platform for all. So yeah, as a DEX, we've listed several markets, and derivatives traders, they're going to like that, because that's what they do. They trade derivatives, but not everyone wants to trade derivatives, or not everyone's got the skills or knowledge or experience. So we really want to open up on-chain trading strategies for the average person in crypto, and that's part of what the hot tub vaults. That's going down that path. It's just starting really. starting with like an arbitrage strategy, but it could be extended to other things in the future, like a funding rate arbitrage, or it could be like a bullish bearish strategy vaults or different. So basically, we're just building like we want to build like all of these different on-chain strategies and put them into a vault basically, so that people can benefit from that and just make alpha accessible to more people as well. So yeah, like so the vaults basically they can just like provide a return for people and they don't have to be a mega brain. So there's something for everyone. Whereas derivatives, yeah, it's kind of like a niche and it's a small audience. And then as well, another thing in the future would be like composability. So I'd say we're the most composable perpetual futures DEX, and we already have a vibrant ecosystem of builders like building on top of our protocol, creating new applications. But in the future, we anticipate as more builders come onto Optimism, there's going to be like a wide range of financial applications built on top of Perpetual Protocol. So at the moment, there's like several vaults built by our partners, Tea House Finance and Brahma. And yeah, we expect to see more products like that as well. So anyone can use our code, it's open source, and build something on top of this building block without permission. So another kind of application aside from like vaults would be like stable coins. So you could create like a synthetic dollar using perpetual products, and then also like structured products, alternative front ends, and then also we have like trader and maker tools. So we've had Component Finance, they built this tool called PerpSim, so you can actually backtest and simulate liquidity positions, and that's aimed at market makers. And then another thing is related to like price discovery. So if you think about crypto prices, how they're formed is mainly through buyers and sellers on centralized exchanges. But in the future, we envision it to happen on DEXs, just like Perpetual Protocol, and then centralized exchanges will basically feed into that. And the reason we think price discovery will happen on decentralized exchanges is because DeFi is more efficient and it's transparent and it's fairer. So I think once the space matures a bit more, price discovery will be in the realm of decentralized exchanges because it will make the markets more resilient. It's more transparent, so there's less scope for like market manipulation. And then if prices are determined on more secure DEXs where you don't have to trust them, then that benefits the ecosystem as a whole, and crypto prices should become more resilient.
Yeah, wow, that's a lot of going on in Perpetual Protocol. I'm really excited for Hot Tub. I mean, not just because the name is fantastic, but because there's so much there's unlimited strategies that can be deployed, right? And
exactly,
it makes it easy. Yeah. Somebody like me where learning about all of the tokens as well as all of the ways to use it, functions with futures and swaps and spot, it's kind of a lot to take in, and just having a vault that will deploy the arbitrage strategy that you think is going to work, that's fantastic. It makes things so easy. Last question for you, Jamie. What's one thing that the crypto community isn't talking enough about?
Oh, that's a hard question, but a very good question. It's just my opinion. I may be wrong, but I think there's two things. There's like decentralization. I think there's a lot of protocols that are like maybe we're not moving fast enough or we're moving too slow, but I think like censorship resistance and decentralization, I think they should be like the primary focus of like DeFi teams. I'm not saying that it isn't, but like I think there's a lot of things like with the USDC depegging, I don't think anyone anticipated that. So like decentralized stablecoins, they've become they've jumped into the limelight and become a lot more relevant, whereas before not many people were really talking about them. And I think that's good in a way though, because then people are kind of discovering as well like the main ethos and the main like values behind why cryptocurrency was created in the first place. And then secondly, I'd say I think privacy as well. Like most of the chains, pretty much every chain is like transparent, and it has its benefits, but I think people should have the option to have privacy. And I think this is an area where it might be a bit harder, in terms of regulations and like technical aspects. But yeah, I think Vitalik recently, well, it wasn't recently, but like a few months ago, published a blog post about stealth addresses on Ethereum, and I thought that was like a really it was really nice to see, because I thought like that's a great direction to take. You know, he's basically saying like the aim is to make transactions more fungible, more private on Ethereum, like by default. And I think that's like a good first step towards solving the issue.
Yeah, I completely agree with you on both of those points. Like there was the Arbitrum DAO vote that just happened a few days ago, where it sort of proved that Arbitrum was not decentralized as they suggested that it was. Essentially, they had a proposal that went to a vote. It was voted against, and they still made the transaction anyways. And then they re-voted and won the governance vote. I think that these types of claims for decentralization are a disservice to the entire community. But you know, it's going to be a long road for Arbitrum to make it back out of that.
Yeah, I think it's like, I don't know, maybe they were like unfairly criticized, but you know, there's always going to be that stage where decentralization is like can't be the priority at first. Like you have to get the basics right first, like product market fit and finding the audience. You know.
Yeah, definitely. Mm-hmm.
But yeah, I think like the ultimate goal should be decentralization, and I think we'll see that like slowly. But yeah, I think it should be talked about more, maybe.
Yeah. Are there any privacy networks that you're interested in? I know Aztec just recently stopped as they're working on a new iteration, but what are you looking at there?
Yeah, I was really interested in Aztec, but yeah, I think they're switching to like their own layer one now. So I haven't had a chance to check that out in depth yet, but that sounds quite interesting. Yeah, in terms of privacy, I want to look into like Railgun. I haven't looked into that yet, but something that's coming up that I'm really excited about is the Ethereum Monero atomic swaps. So this is being worked on by someone from ChainSafe. Yeah, and that would be like a really interesting application, because you could actually like move in and out of those two different blockchains seamlessly. And yeah, I think that'd be an interesting development to watch.
Yeah, I got to read up more on Railgun. I've heard a lot of stuff about that recently. But thanks a lot, Jamie. We're out of time, but I really want to thank you again. I think this has been an incredible conversation. Lots and lots of alpha here. I think I'm going to have to go back and review my notes because there's just so much to take away. But again, yeah, thanks a lot to Jamie and Perpetual Protocol. Fantastic hearing about the protocol, how it works, and the history of it, as well as what you're seeing right now, Jamie. And I'll keep reading and following you on Medium, and excited to see what the future is going to look like for both of you.
All right, thanks a lot for having me. It was great talking to you, and yeah, I hope to do it again sometime.
Yeah, absolutely.